Hi, I'm Stephanie Lincoln. I work with Jim Cramer on Action Alerts Plus. We're going to talk about these consumer staple stocks. The CAGNY conference is now behind us, and these stocks are starting to show a little bit more signs of life.
Right, and I think that one of the things that's happened here is that we all recognize the first quarter was the big transition quarter. Right. Many of these companies had hedges that were put on that were bad. Many of these companies had really hard dollar comparisons. The dollar was so low versus the euro in the first quarter. And one of the other things that happened here is that the companies themselves, and I think you can speak to this better than anyone, became a place that first people hid and then people hated, right?
Absolutely, I mean these stocks, and you pointed out this morning in our meeting that these stocks they went down less, but they still went down.
They still went down.
So now they're at levels where they're not as expensive, and we have a lot of news out from these companies from CAGNY. They gave us updates, and things aren't falling off a cliff.
Well, give us some specifics, Pepsi, General Mills.
Okay, so just starting with Altria, because that one is awfully cheap. You know, at 9 times earnings, but the company is indicating that they're guiding for a lower volume because they know that the overall environment is sluggish, but they're going to raise prices. They have lots of growth opportunity from the UST deal, especially now that they've financed it.
Right.
So they're committed to their dividend, which is 8.2% yield, which is very, very attractive. So that was one thing. Pepsi had some interesting things to say. A lot of the bottlers had interesting things to say about maybe seeing a bottoming in the North America beverage market.
Well, this has just been a tremendous World War I-like trench warfare between Pepsi and Coke where no one's made any money. So that would be a catalyst that no one's looking for.
No one's talking about that yet, and it is early.
Right.
So we're just getting subtle signs, but it is something that could be quite a positive if it does develop. In the meantime, you have their international business growing like gangbusters, and they're taking share from Coke.
Now, General Mills is a stock that I've liked from the 80s. Ken Powell does a great job. This is one that uniquely in the second half could have explosive margins, don't you think?
Absolutely, and I think it's starting next quarter because you do have those hedges that come off, but they also have a cost-cutting program that they're really working hard on, and they, believe it or not, they have a small piece in international, but they haven't really penetrated that market.
No.
So there's things that they can do targeted internationally as well, but we like it because of the big exposure on the domestic side.
Right, and don't forget, they were adamant, and this was the whole market was so bad last week, no one focused on it. They were adamant that they can hold the line on price. Right. They put through a series of price increases in order to be able to meet the increasing commodity costs. Now the commodity costs are plummeting, but they're holding the line on pricing, which means that the second half numbers estimates could be way too low. This stock at 55, 56 is the cheapest I've ever seen General Mills, and it must be bought.
And the conference call will probably be at their next quarter when they report. That's when they're going to start saying, oh, second half of our year is actually going to be a little bit better than we thought.
Right, because they have not raised numbers yet.
No, they haven't, and they could have.
You got to get ahead of that.
Absolutely.
Excellent.
Trade with us in real time. Email us for a free trial, action@thestreet.com.